Dear learners, this is Shashi Ramachandran. So now you are well aware of concepts of accounting. So in this video, I will explain you the concept accounting equation. So we already learnt about dual aspect concept, which assumes that every transaction has two aspects and both the aspects are to be recorded. So to learn more about this, you can watch my previous video and the link is given in the description box. So, what we understood with this concept was that at any point of time, the resources of the business, the resources of the business entity must be equal to the claims of those who have financed these resources. The proprietor and the outsiders provide the resources of the business, and the claim of the proprietor is called capital, and that of the outsider is known as liabilities. So each element of the equation is a part of balance sheet, which states the financial position of the business on a particular date. The asset side, if you can see here, the asset side of the balance sheet is the list of assets which the business entity owns. And the liability side of the business entity liability side of the balance sheet is the list of owner's claim, that is capital, and the outsider's claim, that you can see Mrs. A's loan and a bank loan. That is what the business entity owes. So the equality of the asset side and the liability side of the balance sheet is an undeniable fact, and this justifies the accounting equation or balance sheet equation. So let's understand that how this accounting equation is justified by each and every transaction. So let's understand with the help of one of the one small story. So Mr. Peter, say hi to Mr. Peter. He owns a bakery. He invested some amount in the business. Now let's see what are the two aspects of this transaction and how and which account it is going to affect. This transaction affects two account. One, the cash is in. That means again, first the foremost thing what you have to remember, every time we have to see from the business point of view. So the cash increases and also the capital, because business now owes money to the proprietor. So that means there is an increase in an asset and also there is an increase in a capital. So increase in asset and increase in capital. Let's move to the next transaction. Now this businessman or a Mr. Peter, he purchases raw material for his bakery shop and he pays cash. So now the effect will be the stock will increase because the raw material what he has purchased, and other effect will be on cash. So stock is an asset. One asset increases, another asset decreases. Now say this raw material is purchased from Mr. Sam on credit. So what will be the effect? Of course, the stock will increase, but there is no cash gone out. So there is no effect on the cash. So what it is going to affect? What is the second effect here? Second effect, of course, is Mr. Sam. Now we have to record his name into our book. The reason is because he has done a credit transaction. So we need to remember his name. So his name will be written under the term creditors because now we need to pay him. So he is a creditor. Goods are purchased from Mr. Sam on credit will increase our creditor. So one effect will increase an asset. Another effect will be the increase in a liability. Moving to the next transaction, say if businessman Mr. Peter has purchased furniture for his bakery shop because he wants his customers to sit comfortably and enjoy their uh, bakery items there in the shop. So now what are the two effects? Of course, the furniture, the asset will increase. Why? Because the furniture has come in. So one of the asset increases. On the other hand, the cash will decrease. So cash is an asset. So here, as one asset increases and another asset decreases. And remember, if it says furniture purchased by Mr. Sam, that means it's always a cash transaction. Moving to the next transaction. Now there are customers in bakery shop and they ask for the burgers. They enjoyed their burgers, paid the cash. So let's see what is the effect of this transaction. The stock, there is a sale. That means the stock reduces. So asset decreased. But the cash, paying the cash increases the cash here. So here the one asset will decrease, another asset will increase. But what if he has Mr. John who has taken the burger but without paying the money? He asked him to write down. Of course, now he is going to write down Mr. John's name and he is going to have a record of Mr. John because he is a customer who did not pay. So now the stock will decrease, but there is no cash which is increased. Mr. John will become a debtor. The debtor is a person who owes money to the business. So Mr. John owes money to the bakery shop, to Mr. Peter or to bakery shop. Therefore, one of the debtor increased, asset increased. Now, Mr. Peter has employed a person for home delivery of his bakery items. So at the end of the month, he pays salary to his employee. The salary paid to the employee. Now let's see how and which accounts it's going to affect. Salary paid to an employee is an expense, and the cash which is paid, the other account, the one which is going to affect is cash because the cash is paid. Expenses are the part of capital. Here, the bakery owner, Mr. Peter, is bearing all the expenses and losses, same way he is enjoying all the profits and income. So his account will be affected with any of the expenses and income. So expenses will reduce his capital. That's the first effect. And also the cash is gone out. So one of the asset cash will also reduces. Now what if the employee had not been paid in cash? So let's see what are the two accounts here. Whether it will be called as an expense or not? Yes, of course it will be called as an expense. Reason because the services has been rendered by the employee. The Mr. Peter has enjoyed his services, but he hasn't paid to his employee. So the capital it is an expense, so capital will reduce, but of course there is no effect on the cash. Now, this employee's account will be maintained by Mr. Peter under the head outstanding salary. So, outstanding salary is a salary which is due but not paid. So, it is due because the services are availed but it's not paid. So, it is a outstanding salary and it will increase the liability of the business. So let's take all these transactions, have a look on these transactions, and now we are going to learn that how it is going to affect our accounting equation format. So same thing, we are going to draw accounting equation format and learn that how these are placed in that account. So just have a look on the transactions which we already discussed that Mr. Peter Cummins business with cash, goods purchased of like 50,000 for cash and 20,000 on credit. Their goods are sold for 30,000. Cost is 35,000 is a sale price and also half the amount is received in cash. Furniture bought for 15,000, paid salary 2,000 in cash and outstanding salary 1,500. So let's have a look. Accounting. equation, which is assets equal to liabilities plus capital. So this is a format of accounting equation where you're going to write all the transactions and under the head particulars. Assets equals to liability plus capital. And again, in assets, seeing the question, reading the question carefully, you're going to divide these assets into different categories. So all the assets are have got different columns. Liability, again columns, and there is a capital. So let's take every transaction separately. The first transaction says Mr. Peter commences business with cash 2 lakhs. So two effects will be cash will increase, also the capital. Second transaction says goods purchased for rupees 50,000 for cash and 20,000 on credit from Mr. Sam. So 50 plus 20, total goods purchased are 70,000, but the cash paid is only 50,000. So when you are deducting the amount, you have to write in brackets. And 20,000 that is purchased on credit will increase our creditors. So 20,000, our creditors are increased by 20,000. That is, in the creditors list, there is a name of Mr. Sam, from whom the goods are purchased on credit. Moving to the third one, but before that, we have to write a new equation. So after second transaction, you will be adding and subtracting the figures and finding out the net result. So you can see here the assets total is, asset side there are two assets, cash 1,50,000 and 70,000 stock. On the liability plus capital side, this other side, it is 2 lakh and 20,000. So both the totals are equal. Moving to the next one, goods are sold for 30,000, means costing 30,000 and sold for 35,000. And half the amount is received in cash. So let's have a look. Goods costing 30,000. So stock is going to reduce. Why? Because we are selling the goods. So 30,000 reduction in the stock. Now 30,000 cost stock is sold for 35,000. So there is a profit of 5,000. So as I explained, the profit will be enjoyed by the proprietor. So will be added to his capital account. So 5,000 added to capital. Another thing, this 35,000 is a sale price, but half only is received. So half amount of 35,000 will be added to cash. And another half becomes your debtor because you're going to receive this money in future. So the amount owes from the outsider is actually a debtor. Moving to the next one. Now, before that, new equation. So we are going to draw a line over here and we are going to add or subtract the amount so that we get a final figure. You can every time you can check with your new equation, these totals should be equal. The equation, accounting equation should justify or should tally. Next one is bought furniture for 15,000. Furniture is an asset, so one asset will increase, but the amount is paid in cash, so another asset will decrease. So there is a new equation where you have furniture also now. Moving to the next one, paid salary rupees 2,000 and the outstanding salary is rupees 1,500. So when the I've shown it in a two different way. You can write in the same thing. If I see here, the total expenses are 2,000 plus 1,500, 3,500. So if I'm showing it separately, then I'll take paid salary first. Paid salary, it's a expense and also the cash is out. So as a cash gone out, so minus cash, and as an expenses, this will affect your capital account, proprietor's capital account. So expenses, losses, income and profits are recorded in capital account. Outstanding salary, of course it is, surely it is a expense, so definitely it is going to deduct from capital, but the cash is not going to be deducted now. So outstanding salary becomes a due amount obligation for the business, therefore it is another liability called as the outstanding salary. So let's see the new equation. This is a final equation actually. So you can see the total of asset side is 2,23,000 and the total of liability plus capital is again 2,23,000. So this shows that every transaction has two effect and it justifies the accounting equation. So you've seen that every step it was justifying the accounting equation. And as I said, this accounting equation is also the balance sheet equation. So in our balance sheet, we have capital and liability as one column and asset as a one column. So whatever we have calculated here, cash, stock, debtors, furniture, all these will be recorded here on the asset side. Same way, the capital, creditor, and outstanding salary will be recorded under this. So, and if we add all this, we'll get the same thing. So, balance sheet always tells, because of this reason, that transaction has a dual aspect and dual effect. So that if we record it properly, then surely our balance sheet will tally. So this is something we learned today. Hope you like this video. Share this video with your friends and do subscribe to my channel Exuberant Learners. Also click on the bell icon to get the latest video updates on my channel. Thank you.